Hi everyone, today I'm talking about Expedia stock, which is a stock that I've never covered on this channel before. In fact, I've not even talked about it once. So I'm going to talk about Expedia stock, and the reason why I'm talking about Expedia stock is because it had its earnings on last week, and after it had its earnings last week, the stock dropped about 25% after earnings, and the stock is pretty much down from its all-time highs that it set back in 2017. So we're going to look into the stock today, and I'm going to talk about some good points, some bad points, and then I'll talk about if I think the stock's a buy towards the end of the video. It is a stock that I've been considering buying, so I have had quite a deep dive into the stock, and like I say, at the end of the video I'll let you know what I think about the stock. But when we actually now go into the stock chart, what we'll see in the stock chart, and I'm going to go for a 5-year period, is that we'll see before July 2017 the stock was actually doing pretty well. It had a decent run. In fact, 2017 was a very good year for the stock market in general. I had some decent gains in 2017. But July 2017 is kind of where the stock peaked, and it peaked at $160, and since then it's dropped down to $95. Now when I actually did a lot of the research for this video, the stock was at $99, so it has dropped even a little bit more since then, about another 5%. Now the funny thing is, since July 2017 the stock has carried on growing revenue and EPS, so it's just naturally pulled back from all them highs from just a range of bad news in general, as have quite a few stocks from that point that are in kind of that same industry. They've all kind of pulled back since 2017. One of my stocks that I'm invested in, which is Canville, haven't hit their highs for a long time. And Expedia is the same. Now, it wasn't only Expedia that did drop on Friday. We saw the same from TripAdvisor and Bookings.com. They also pulled back quite a bit. And we'll talk about the earnings part in just a second, because the information that was in there was the reason why a lot of these travel agents stocks pulled back. Now, when we look into the earnings part, the big thing that stood out really was the EPS miss, and the EPS missed by quite a bit. And when we tried to dig in and see what happened there, and obviously when an EPS miss, it kind of affects the stock a little bit, but if you've done okay previously and the guidance is pretty good, normally the stock kind of doesn't bounce too much. But if some negative news is in that earnings report, which was in the report for Expedia, then that's what sent the stock down, and that's what we had with Expedia on their earnings report. Now, they said that what is happening quite a bit is they are having quite a few problems with Google, and it's costing them a little bit more money because of advertising. Because what has happened now is Google have changed their system with how they do a lot of their adverts, and obviously when you're kind of wanting to be the top of Google search engine with so much competition in that area, it's really important that you're near the top of that Google search engine. So basically I have to blame Google for its EPS miss. Google is pushing its own hotel finder, which you might have seen if you have been searching for any holidays recently. You'll see that Google actually has its own hotel finder, which makes sense for Google to prioritize its own product first. And then after that as well, it's been pushing a lot more of its paid links higher up on the search engines, and obviously whoever's paying the top dollar is going to get on the top of the search engine, which I've talked about this for a while with Facebook and Google, that eventually they will start charging more, because for me that's the future of advertising. And it seems like Expedia has hit this problem where it is getting pushed more, these paid links to be on top of the list, and Google putting its prices up quite a bit. And for me, it seems they kind of like Google, what are you doing, like what are you playing at? But for me, Google is making the right decision. It's trying to make the most money for itself first, and then then prioritize the other companies, which obviously makes sense from Google's point of view. So this is something Expedia are going to have to cope with going forward. Now the thing is the industry that Expedia are in, there's not really much loyalty in that industry. It's kind of who's got the cheapest hotel, who's got the cheapest flight. There's no loyalty. The customers are looking for the cheapest product out there. Every so often you might go, oh, I prefer to use this brand because I've had a good experience with them. And I do have the Expedia app, and I've used Expedia before, and you know what? It was actually pretty good, and the app is really good as well. I've got to say I do like Bookings as well, their app, and the experience with them was also pretty good. So I do think the product is pretty good itself, as well as some of its competition. But like I say, the competition is quite heated in this sector overall, and like I say, for me, this problem with Google is not something that's just going to be affected in this earnings report. It's probably from now on going forward going to always be a problem in the future earnings report. And that's something to be really careful of. You know, some news that we get out that are like, you're like, oh, that's going to affect the company for the next quarter or the next financial year. This could potentially be forever the problem, and it also could be an increasing problem for Expedia going forward, as a lot more competitors are going to be willing to try and get at the top of that Google search engine. So with that big news in mind, we're going to go through other parts of the company now and kind of assess what's going on with Expedia. This is kind of how I always search into stocks, and on the whiteboard I've got some red points that are negative, black points that are pretty much neutral, and greens that are really, good points for the company. And after kind of seeing what's going on with the company and assessing what price it's been at and the movements and recent news with the company, next thing I do is I go search the PE. Now the PE seems about 28, and a few different numbers came out from a few different people, but it seems like the general consensus is that the PE is 28. Now I like comparing that to a historic PE, and it seems just about right, to be honest with you. Expedia's PE is one of the most volatile PEs that I've ever seen in my life. It's up and down quite a bit, so normally I like to say if it seems pretty cheap or not, but it's quite difficult because it's moved around so much. But 28 does seem nearly about right for this stock. So I would say it's about an average P right now for Expedia. Now the forward P I'm going to put out there is 12, which is really good. And for me, to be honest with you, I would be looking towards a P of 15 to 20 to get into this stock. So for me, the P is just a little bit too high right now, in my opinion. So that's something just to be careful of. Now the balance sheet itself is not too bad. It's not the worst balance sheet I've ever seen. It's not the best balance sheet I've ever seen. So it's not too bad right now. Obviously, I always like to have see a good balance sheet, because a company like this is very vulnerable to the economy. Let's say the economy, has a terrible 2020. This stock would suffer absolutely huge, because one of the things that people are going to do is, are they going, if they're short for money, are they going to go on a holiday? Are they not? That's one thing. Are they going to go pay for that 5-star hotel, or they're going to save some money and go for that 4-star hotel? That's obviously one of the things that could happen with Expedia, and it's potentially right now, that's one thing you got to be careful of. So I would like to see a good balance sheet rather than an okay balance sheet, especially with a lot of the recession talk that we've had recently. Obviously, I always say you can't always consider a recession, because we've been on about recession for 4 years and it's still not happened. So, we might not have a recession for another 4 years. At the same time, you've always got to be careful. There could be one next year, and that's always something to be careful of when looking into a stock. The dividend is at a 1.42% yield, which is okay. Obviously, when you're holding stock, it's always nice to have a little bit of a dividend income, isn't it? Also, something that I did notice is that it also has a good history of increasing dividend. So if you do invest in this stock, and potentially if you end up holding it longer than what you kind of plan to hold it, at least you'll get a dividend that carries on increasing, which is really handy. And also, this dividend's quite healthy because it's quite a low payout, which is really good. So when I talk about balance sheet and the low payout dividend, this also kind of like backs up the balance sheet being okay, because I talked about the balance sheet in a recession, but it balances out that it's still quite safe to carry on paying that dividend yield it has. Now, one thing as well, when I'm buying into a stock that's on a discount, a big thing for me is just seeing what's going on in the insider activity. And when I look inside, I want to see insiders buying, because I feel like the stock is cheap and they know positive news and see the stock rebounding in the next 12 months. If I see bad news and people are still selling from there, it kind of suggests to me that the stock is going to go down a little bit more from here. And I talked about this in Arista Networks video, that it seemed like a lot of the insiders were worried about the stock, and they were selling quite a bit before the big massive decline, and then we got the decline, and it seems like they were selling out for there. Now, it does seem funny that Expedia did have a big chunk of shares sold a few months prior to its releasing its earnings report, so it seems like someone knew about that. But at the same time, at the moment, no one has bought any shares after it going down 25%. That could change at any time, so that's something just to keep updating. But at the moment, no one's buying right now, but at the same time, no one is selling right now. So I kind of take that as it's like you can't really doesn't give you any information really. but at least no one's selling still at these sort of prices. I had to check and see what other analysts were talking about Expedia and talk about where they think they're going to go. It seems like me the general consensus is that it's about a 30%, 35% upside from here, which to be honest with you, I kind of agree. To be honest with you, when I get to my opinion at the end, I'm probably around about that same area. But all from these prices, a lot of analysts were giving a lot of upside from here, so it does seem quite positive for the stock. And this is actually why I chose to talk about this stock, even though Bookings and TripAdvisor, they went down. I chose to talk about this stock because I like this stock more than the other two. And also I see more upside in this stock compared to the other two. So that's why I talked about this stock, and it seems like analysts seeing the same thing as well. So like I say, to be honest with you, in this area, Expedia does seem like the best kind of stock to get in there. And the actual still growth potential for Expedia, they have had to cut their forecast a little bit because of the Google news. But even so, it's looking like it's still going to be growing at 8%. And that's nothing to be sniffed at. That's nearly a double-digit growth. That's nearly a growth company for me. So 8% is still a really healthy growth for this company. And that shouldn't be overlooked because that is a really good positive that it's still going to be able to grow kind of the revenue and EPS at 8% going forward. So my overall opinion about Expedia stock is kind of a mixed bag, really. There's quite a few points I like on this stock, and there's a few points I don't like on this stock. When I look at this stock, I'm kind of a little bit... I actually did a lot of the research a few days before recording this video, and I kind of was on the fence a little bit, but I'm starting to grow on this company a little bit, and I'm starting to like it. One thing that puts me off is how vulnerable this could be to a recession, especially when I've also got Carnival Cruise in my portfolio. But that's just kind of on me. That's kind of just only my portfolio. You potentially could have the same problem. But I look at this company and it does seem on a discount. It does pay a dividend, and it is also still growing at quite a nice rate. So for me, I am kind of watching this company right now, and I do see 30% upside. But at the same time, I would like a little bit more of a reward for taking on this risk for this company. When I see other companies on the stock market that I see a lot more upside on and a lot more reward, that's what kind of puts me off this stock. So for me, in my kind of opinion, even though I do see a good 30% in this upside in this company, just because of the risk, I would like to get a little bit of a bigger reward off this company. So in my kind of opinion, I'm looking at this stock and I'm thinking, if this stock starts to drop into the $80 range, then for me, I'll start taking another look at it and then reviewing it from there. I think low 80, between $80 and $85 would get kind of interesting for me there. And I'll start looking at it and going, maybe this is worth taking a punt on. Right now for me, it is slightly on a downtrend. It has some negative news. It probably won't shoot up for a while until some positive news comes out or a positive earnings report. So it should be down here for a while, or it could keep going down. So for me, I'm kind of just on the fence. I'm going to watch this. I'm going to watch it quite close. It's going to be quite high up on my watch list and just see what's going on with this stock. But for me, I just like a little bit lower price to count for that little bit of risk that I'm taking on right now. So even though I like the company and I do see upside in the company, I just like to get it a little bit cheaper, in my opinion, before I go buy this stock and take this the risk on with this stock. So that's me talking about Expedia today, guys. I hope it helped you if you were looking into this company or was just liking to get a bit of knowledge on it. If you could give the video a like, that'd be amazing. Subscribe if you haven't. Thanks for all the support recently. It's been absolutely amazing. So thank you so much. I'll see you on the next video.